Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, it's the last weekend of the month, Phil. I should imagine there's a lot of activity out there, certainly in the franchise sector with the plate change.
Yes, yeah. I think some of it, rumours are it started early.
Yes.
From some certain manufacturers where they were starting to think about those vehicles that may be parked in compounds and fields that they're getting registered.
I've heard some interesting percentages for the last week of the month so far, and we've still got a few days to go.
Yes, yeah. I mean, obviously, I think we touched on it a little bit with Jeremy on the chat we had with Jeremy from Cap HPI that was on your podcast feed on Friday late morning. So, we kind of touched on it there. So it'll be interesting when we do see the September results, and then if we can get to that, what was registered and what days they were registered. It'll be quite an interesting one, but we'll see. But that's September nearly gone, Curtis, and now we're heading to the fourth quarter of the year, which again we do talk about with Jeremy on the full interview there, don't we?
We do indeed, yeah, and it's worth checking out that interview. We'll have an extract from that in a minute. Also on this week's show, we're joined after the midway break by our car retailing guru in Godbold with some top tips on, funnily enough, how to close September and Q3 as strongly as possible by maximising activities around tactical registrations as well as used cars. So don't miss that.
Quite timely. Only a couple of days left of the month to do what Ian's advising. And this week, I think a couple of shout out really is I had the pleasure as chair of the VRA as hosting a members meeting, and it was a bit further south, but not too far, Curtis. It was at the Toyota Burnston site.
Oh, that's very north for me, Phil.
It's very north for you and quite
nowhere near south.
No, it is for me. But yeah, over off Toyota Island there, which is the first time I've been, interestingly, to that Toyota Island there. That's something else. But yeah, it was a great event, great conversation. But interesting, we were talking about the short supply of those 3 to 5 year old vehicle market and how strong that market is. And there'll be a press release coming out next week, I think, from the VRA on that with a little bit more details. But we also had Mike Frizzell. If you remember Mike, he used to be with ASE. He's now the CEO of leasing.com, and he shared some fascinating insight into activity around what vehicles have been searched on their platform, some of the deals that are on their platform, and can you guess? Probably one of the highest searched vehicles currently on their platform.
Well, I'm only guessing, Phil, but I would suggest that the Ford Puma Gen E is doing rather well at the moment.
It certainly is, Curtis. It certainly is. There's some strong deals on the platform for that vehicle, amongst others. But yeah, it was a great chat there with Mike at leasing.com.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
And companies already featured on our supplier specials include Prospecting Dynamics, iVendi, ETT, Generational, Tracker, Jigcar and CheckFix. So do check those out because they're all fascinating insights into what these companies are doing for dealers, and you can find them all in your podcast feed. And if you'd like us to profile your business, then just get in touch with Philip or myself. We're both on LinkedIn, so do direct message us there.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from AM, Car Dealer, Motor Finance, BBC News, Sky News, and The Times. Starting with, we've got the latest on JLR as it restarts some IT systems following the cyber attack, as news breaks that it is not necessarily insured against cyber attacks, and the government considers stepping in to buy parts to help the business. BMW follows Stellantis by making a much bigger provision for the FCA's finance mis-selling redress scheme. Renault Retail Group refocuses on southern representation, especially in and around London, and we'll finish with the latest financial year ends from Lookers and Steven Eagell and half-year results for Pinewood. But first up, here's an extract from our interview with CAP HBI's Jeremy Yeh on September's trade value movements.
Well, let's get on, because obviously this month has been a fairly crucial month for the sector. To say the big month for the plate change, and obviously, as I say, time of the year before we head into that final quarter of 2025 there. But can you take us through the headline trade values at that 3-year 60 benchmark figure, and how that compares with previous Septembers as we move into October movements?
So September into October, live valuations ended, was publication day today. The book went up, the monthly movement is a 0.2 increase. That's against a usual backdrop of a 0.2 drop. So we're 0.4 ahead of where the seasonal average is. And it's been a really stable month, really good month, strong month actually, certainly for September, which has continued all the way through the month. It's been just a follow on from the summer months. In terms of how it fits from previous Octobers, last year was a 0.2 increase as well, so that was a strong year. 2023, sorry, that went down 1.9%. We know that the back end of the last quarter or so, probably from the end of the summer months of 2023, that was a real sharp realignment of over 10%, I think, in that last quarter. And then 2022, it went up from September, October, 0.3. So bang in line with previous years. I would say of the recent years anyway, pre-COVID times, it's probably down a little bit stronger than that. But yeah, average seasonal movement is a 0.2 drop. So we're ahead of that, which is great news for the industry.
And how's that looking from a year-to-date perspective? We've got a couple of months left from October into November, and then November into December. So we kind of, depending what happens in the final months of the year, a full year point. How does the year-to-date look? Because it feels like it's on par with last year, but obviously slightly ahead of previous years.
Definitely. Well, so overall, with the plate increases for the year, because obviously we're always valuing the 3-year car at the beginning to the end, it's actually 0.8 up. So that is bang in line almost with last year in terms of where it's tracking overall. It's definitely stronger than some of the previous years. I think overall, it looks like it's probably like the 4th or 5th sort of strongest year. If you take away, I guess, the craziness and the increases we had in 2021, probably like the 3rd or 4th strongest year overall. So yeah, I think we're on track to probably be, depending on how the last quarter, to your point, how it performs overall, we think we're probably going to be in and around maybe 3%, which would be stronger than, the year average, which is probably about a 5% overall depreciation in an average year. So we're definitely on the stronger side of an average year, and we have been all year and even last year, to be fair.
Now, Jeremy, we'll look at fuel trends in a moment. But before we do, were there any notable price movements by age points over the course of September?
Yeah, I think, 1 year, it went down 0.1% overall, which is roughly £60. 5 years, it's actually up 0.3 or around sort of £40. And at 10 years, marginally up about 11 quid or 0.1. So it's the older ages which have really, got the desire in there. But, even at every age point, it's very, very marginal in terms of increases or decreases. So yeah, still really good across every age point.
Yeah. And how did the various vehicle sectors perform? I noticed it was a good month for certainly the mainstream sectors, wasn't it?
Yeah. Superman is the strongest at 1%, 1% increase, and that's roughly about 120 quid, £117 to be precise. followed by City Car as well, 0.8. MPV was up 1% overall, and even ones with, there's probably a little bit more volume around the lower medium, that was up 0.2. Even SUVs went up 0.1 as well. So yeah, a really good for all mainstream sectors across the board, and even at most age points as well.
Well, it's always a great chat with Jeremy, and we always manage to, throughout that interview, the complete interview, as you say, is on your podcast feed from Friday morning of this week. But we're always getting a good conversation with Jeremy in terms of just not just reading out the editorial, is it? He does share his views on a few things as well.
Yeah, definitely. It's definitely worth checking out the full interview, because he does go into quite a bit of detail that you might miss if you read the editorial, and it really does add some meat to the bones of it. And fascinating chat as ever. And he does actually talk about the implications for Jaguar Land Rover with the shutdown of the plant there, and how that's affecting trade values.
Yeah, definitely. So don't miss the full interview then. That was just a small snippet from that chat with Jeremy. But we'll get over to the headlines. And as Curtis said there, we've got some big headlines today. So the first two are obviously about the latest from JLR. And this is very evolving at the minute for obvious reasons. But the first one is with the BBC. And this came out on Friday morning of this week, that JLR restarts some IT systems after cyber attack, and this is that says it's begun a phased restart of its operations, with parts of its IT system are going to be back up and running. And obviously this is that the company said it was working to clear a backlog of payments to suppliers, as it now had its increase to its processing capacity for invoicing. And that's the bit you don't think about with this, Curtis, isn't it? I mean, we talk about the cars and availability of cars, but actually there's all the supply chain that had not been paid. And they've got pay employees to pay and everything else. It's huge impact.
It is absolutely massive, and this has been going on now for a month, because the attack happened at the beginning of September and has run through. It's totally devastated new car sales, but that's only part of the picture, isn't it? Because it's the manufacturing of cars, it's the supply chain in the Midlands and indeed across the country, where a lot of the suppliers are dependent on Jaguar Land Rover and operate in just-in-time manufacturing processes. So, just a day's shuttage would have, big impact on the business, but a month's worth of shutdown is having enormous ramifications. So we're starting to see hopefully the first signs of Jaguar Land Rover coming out of this with this phased restart.
Yeah, the BBC story does focus quite a bit in terms of the political side of this from the government, and obviously there's been lots of questions of how involved the government have been with this, and in terms of where they are stepping in to support, whether it is JLR themselves or the whole supply chain, and that impact on the employment around and around that area of the business there. But because I think this is it referred back to the old Rover MG days? Was that the reference where the government did step in? I think we're old enough to remember that, Curtis.
Well, yeah, because I was heavily involved on the news side of things then, actually following the fallout from MG Rover, and the government did not step in. There was a lot of talk about it stepping in and rescuing MG Rover, but it never happened. And eventually the business was sold to Shanghai Automotive. So the government has been talking a lot this week, and has been hinting, but so far no deliverables, because there was a report that ITV covered, or probably early part of the week, about the government suggesting that it might start buying some of the parts to help the parts suppliers. But that's gone very quiet. There was no formal announcement. So whether or not that was a leak, we don't know.
Yeah, and I think there is a quote in the BBC News story saying that Sir Keir Starmer said that the situation faced by suppliers was urgent, but admitted no support plan had yet been finalised. And said that I am actually aware of the urgency of the situation and the difficulties that many of these companies are inevitably finding themselves through no fault, of course, of their own. So I think there's obviously the government putting out that they are obviously in close conversations and aware of the situation. But as you say there, Curtis, nothing intervention-wise has been announced yet on that one.
Yeah, and to compound the problems facing Jaguar Land Rover, there was a report in Sky News under the headline, Jaguar Land Rover was not insured for cyber attack. Journal claims. Now, this was a report that Sky picked up from The Insider, which is a B2B magazine or magazine website publication for the insurance sector. And the report from Sky News says that JLR failed to finalise a cyber insurance deal before it was struck by hackers, which obviously has forced the halt of production. And the piece in the Insurer cites 3 insurance sector sources who said that the UK's biggest car maker was still in negotiations over cover before the cyber attack hit at the end of August, beginning of September, which opens the prospect that the company faces footing the bill for the hacking by itself. And I mean, if this story is true and JLR did not respond to Sky News for this story, then the ramifications are massive, and why they didn't have this in place before it hit, especially as we've seen so many other businesses hit. But a big corporation like Jaguar Land Rover, that should have been in place.
Yeah, I mean, it just gets from bad to worse, doesn't it, with this one? But I know we were talking before the show that there's been sort of conversations through the media today that there is a call that they make it law that anybody that does suffer a cyber attack, that they do report it, because the indications are that there are quite a few cyber attacks, maybe not to this level of nature, that are happening here in the UK that are not being reported and not being aware of, and sometimes that the cyber attackers that are being paid out by the company, which one opinion is that makes us a target, an easy target for these attackers, if they think that, one, we're not at full defence on for these attacks, and two, there's a good chance that you will get paid out if you are held for ransom or anything like this. So I think there's a lot more to come from this. I think one of the cyber insurers' shares suddenly rose this week as well, Curtis, but on the back of some of this from all accounts.
Well, what a surprise. Every cloud and all that.
Yes, yeah. If we'd only known earlier, we might have had some of those shares. But yeah, I think, as I say, these are the stories that were out in the mag on Friday morning of this week. And obviously this is a very fast moving and developing story. So I think it is just a case of see what is published and announced as and when the information becomes available.
Next headline is from The Times, and it is car finance scandal fallout hits BMW for £200 million. Yep, that's £200 million. Now, we actually covered only last week about Stellantis in the UK setting aside £37 million. And you and I were saying, God, that's a lot of money. Yeah. That's a fair old sum. But BMW, £200 million. And this, I mean, fairness to BMW, so this is, BMW Finance. This provision was made before the last ruling came out. So it was made earlier in the year. And they've ring-fenced this. They've made the provision. So they will be in a really good place to make any repayments under the redress scheme that the FCA are due to announce sometime in October.
Yeah, like you say, there's been lots of conversation around this because the announcement is imminent. Early October are the indications, but this story does cite the couple of the questions at the minute that's also circulating around, what the overall cost could be with this. And I was in a conversation this week that there's rumoured to be 7 million applications through the small claims, or the CMCs, circulating. And some of them duplicated up to 10 times from consumers have submitted claims through the CMCs. So within this story, it does cite the situation, saying that while the worst case scenario for lenders has been avoided after the Supreme Court last month largely sided with the industry in a landmark ruling on motor finance arrangements, that the FCA has since warned it is expected its compensation scheme will leave firms shouldering costs between 9 billion and 18 billion, saying that lenders ranging from Lloyds Banking Group, which is Britain's largest domestic lender, and Santander UK, to the motor finance arms of the car manufacturers, are preparing for a hit. And this is obviously that it includes BMW, which accounts filed a company house last week by its Farnborough-based finance arm, shows it had significantly increased its provision for the cost of customer claims relating to discretionary commission to almost 207 million, and that was up from 70.3 million. So this is eye-watering numbers that's been stated there, but some significant variance in what their expectations of the total cost will be.
Yeah, and BMW was certainly looking at a worst case scenario there, so that provision should put them in a good place, shouldn't it?
You'd hope so, wouldn't you?
Yeah.
You would hope so. So again, I'm sure we'll be going back to both those stories in future podcasts. But we'll head over to AM Online now, and this is that Renault Retail Group refocuses on the south as it develops its network. Now, you and I again were talking about this because there was rumours at one point they were exiting retail because they were selling off some of their northern sites, but that's because obviously they're going down south.
Yeah, coming down south, my end of the country, Phil. I mean, they're really looking at London in particular, as well as some of the southern counties. But it's an interesting move, this, isn't it? Because the Renault network over the years has seen quite a bit of a shakeout. It was significantly reduced, then rebuilt. But in the background, there's been the Renault Retail Group, which is obviously owned by the OEM, and it's always interesting to see what's happening with that, what strategic direction it's taking. And this piece in AM from Amy Turner is based on an interview she did with Fred Mallard, who is managing director of Renault Retail Group. And it's a good oversight of the current thinking there. And he's saying that in 2024, they initiated this strategic plan to reduce its exposure to the north of the country and concentrate on London. And he goes on to say, we're also very strong in South Wales. And as part of the plan, we acquired a network in Bristol. So this was earlier in the year. It acquired Carco Group, which operates under SJ Kirk and City Motors branded dealerships in Bristol. And those dealerships already sold Renault vehicles. So they became part of the Renault Retail Group and helps sort of consolidate Renault Retail Group's representation in the south. And in the meantime, it sold some of its sites in the north, certainly in Manchester, to Lithia, and also some sites in Birkenhead and Liverpool to Arnold Clark. So you can see this reshuffling of the pack and its target on southern counties and London in particular.
Yeah, and they do call out there that although they are clear to say that it's Renault themselves are not abandoning the north. This is about Renault Retail Group in terms of their strategic shifts, and because, as you said there, Curtis, the Manchester and Liverpool representation are still Renault businesses. They're just not under the Renault Retail Group ownership. They are obviously, as you say, they're with Lithia and with Arnold Clarks, and they're saying here that London is almost a strategy in itself for the EV range. Bristol, another EV hotspot, with it has the low emission zones, high awareness and high average income, and the combination of these factors has been confirmed by the strong early sales of the Renault 5 in the city. So again, I suppose it is this shift more to an electrified marketplace, and then they're combining that with the geographic strength of the brand as well, which is quite an interesting one, to say the least.
And you mentioned EVs there, and there's a really good sign-off, and it really showing the strategic direction of Renault Retail Group and indeed Renault itself, because Mallard says that selling EVs now has become part of the job for retail staff, whereas just a few years ago he admits that not all salespeople were confident selling EVs. But the direct quote from him is, now, if you're a sales executive in our teams and you don't sell EVs, that's just not possible. Around 30 to 34% of our retail orders are electric. It's a normal part of what we do. So very much a sort of statement of intent there, and you can see where the direction is going now.
Most definitely. So we'll be back with the rest of this week's headlines after this month's fantastic top tip from Ian Godbold.
You're listening to All the Chatter That Matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media. Available on demand, wherever you are, on your podcast feed. Next up is car retailing industry guru Ian Godbold, sharing his top tips on how to steer your business to success.
Hello everyone, and welcome to this month's top tip. Sorry if I'm sounding a little bit croaky today, but it is all hands to the pump as we close out the last weekend of the all-important third quarter. Now, all eyes are on Q4 and a fast start is absolutely vital. For our new car dealers out there, you may be involved in some tactical registrations where speed is everything. It's critical to make sure those vehicles are registered, imaged and promoted on your website right away. Use strong marketing hooks like cancelled fleet orders, nearly new and delivery mileage. Every day delaying will cost you money. Make them featured listings, push them through Meta and PPC and get them positioned right at the front of the dealership. Stick it up so consumers are aware of these offers as soon as they walk into the dealership. This will help you turn the stock quicker. Now, for used cars, October is a crucial month. Many of you will have received additional inventory through part exchanges, which means that trade stock needs to move fast. Get it to auction, free up space and focus on prepping and merchandising retail units as quickly as possible. Remember, as supply increases, the market tends to soften. That's why adopting the principles of velocity, so quick stock turn and reduced days in stock, is absolutely key. The faster you move now, the more opportunity you'll create to purchase stock in the quieter months of November and December, getting ready for the all-important big Q1 of 2026. So buckle up, stay sharp and good luck this weekend. And if you'd like to know more, feel free to get in touch with me at Ian Godbold at igcdigital.co.uk or just message on LinkedIn. We'd love to hear from you.
He's absolutely on message, on target, and very timely on that, isn't he?
Yes, 100% there. And, you know, you just, a phone call with Ian, you know, it just fills you with that excitement and insight as well. So, yeah, I mean, not many days left. And he made some absolute spot on points there, didn't he, in terms of what the dealers should be thinking of now at the end of the month.
Yeah, definitely around those tactical registrations, which we seem to be talking more and more about at every month end now, it seems. But yeah, he's made some great points there. And as he says, if you do want to get hold of him, then do message him directly on LinkedIn or email him at iangodbold@igcdigital.co.uk.
And heading back to the final headlines of this week, and AM Online, Lookers post 55% profit boost in first full year under new ownership. And this is that Lookers has reported a sharp rebound in pre-tax profit performance 1 full year on from its acquisition by Canadian owners Alpha Auto Group, saying that the top 5, what AM100 Group moved to private ownership, obviously in October 2023 there, following a $504 million deal by Global Auto Holding Limited, and the UK company set up for the new deal of Alpha Auto. I mean, these are some fantastic figures, and James Brearley, friend of the podcast, he must be really pleased with these results.
Yeah, and these results, so that they're to the year end December 31st, 2024. They kind of buck the trend somewhat, because we've been reporting on year ends for the last few weeks, and we've seen a trend, haven't we, where turnover has been up, profits have been down because costs have gone up and margins have been squeezed. But Lookers seem to have sort of bucked the trend here, because the underlying profit before tax was up 55% to £58.4 million, with profit before tax at £43.7 million against a £1.8 million loss in 2023. And talking of margin preservation in used cars and disciplined expense control were both cited as key contributors for these positive results, alongside good after sales growth and growth in leasing and other activities. Turnover softened slightly by 4.4% to 4.3 billion, with Lookers stating that pricing normalised following the end of supply constraints and consumers face cost pressures, but gross profit performance was up 0.4% to £561.8 million.
Yeah, and they do cite here, in terms of what's happening, that new used and after sales performance, that registrations rose 3% to just short of 97,000 units, but revenue slipped 0.2% to 2 billion as the mix shifted towards a lower average selling price fleet and Motability channels. New car gross margin eased to 7.4% from 7.7%. Used car volumes fell 7% to just short of 75,000 units there, with a revenue decline of 11.1% to 1.6 billion, but saying that the margin improved to 5.6% from 5.2% through tighter stock control and pricing. And then they talk a little bit about finance insurance income reduced slightly, which probably refers to that earlier story, by reduced 9.2% to 55.4 million, in line with obviously affordability constraints and a lower penetration there. But service and parts revenue and body repairs nudged up 0.5% to 382.6 million. So I think, all in all, this is a fantastic result there, and I'm sure they are very pleased with that performance for year end in 2024.
And following on from that, heading over to Car Dealer magazine, the headline is Toyota specialist Steven Eagell announces record revenue as profits nudge up in robust year. So this is for the same period. So this is also year ended December 2024, and pre-tax profits of £15 million in that 12-month period. And the figure represents a small rise on the previous year's 14.9 million as the group bucked the wider industry trend of tumbling profits throughout a difficult year, which is something we just talked about. The group also generated more revenue than before, with turnover reaching just over 1 billion, 1.09 billion, compared to 1.04 billion 12 months before. And the results was made possible thanks to a total of 55,147 new and used vehicles being sold throughout the year. And that was up from 50,484 in the previous year.
Yeah, and there's a quote in here from Steven Eagell, the boss, reflecting on the year, saying that the group delivered a robust performance in 2024, continuing its strategic expansion and maintaining strong customer satisfaction. And despite macroeconomic pressures, the group recorded solid revenue growth and operational efficiency improvements, saying that the group continues to focus on its core business of automotive retailing whilst exploring opportunities for digital transformation and after-sales growth. So a nice little quote there from Steven Eagell.
And you know what, it really is a remarkable business, because I remember covering their entry into the market in 2002 when they had a solar site in Milton Keynes representing Toyota, and they're now Europe's biggest Lexus and Toyota dealer with 30 sites across England and Wales. So, a remarkable achievement there, and it's good to see they had a decent year last year.
Most definitely. So, final story for this week, we're heading over to motor finance online, and this is that Pinewood.ai accelerates growth with revenue rise and US expansion plans, saying that the cloud-based dealer platform lifts recurring revenues and margins at Pinewood.ai, accelerates international rollout in Japan and North America. So you can see why Bill Burton's got a big smile on his face there, Curtis.
He's looking very happy these days, isn't he? And it's worth just giving a bit of background, a bit of context to this story. So Pinewood was part of Pendragon. Pendragon sold its dealership business to Lithia in 2023, with Pinewood spun off into a separate listed entity. So it's effectively what's left of the old Pendragon business without the dealerships. And the plan from the outset was to scale the business rapidly. Beforehand, it had a sizable representation in DMS across the UK, but that's exactly what it's done. And it's consistently targeted the top 20 dealer groups, and now it's targeting the top 100 dealer groups. And these first half results show that revenue reached £16.8 million, or 85.7% of total turnover, underscoring this shift towards what it said is a subscription-led income model. So gross profits were up 17% to £17 million, and maintaining a margin of 86.7%. I mean, that's just massive.
Yes.
While underlying EBITDA advanced 14.5% to £7.9 million at a margin of 40%, and underlying profit before tax was up 10% to 4.4 million. So some impressive half-year results here from the new look Pinewood.
Yeah, and there is a sign-off here at the end that he said that the group remained on track for pilot the Pinewood Automotive Intelligence platform later this year and described the new EBITDA target as ambitious, underpinned by a pipeline of new customers and the scale of the global opportunity in the market. So kind of huge intentions there, big growth plan, but obviously they have a strategic growth plan to support that in terms of that international growth and a pipeline of new customers. So back to the shares, I'll be getting some of them, Curtis, it looks like. But anyway, that's it for this week. So as I say, lots of big headlines there, particularly still with the JLR cyber attack situation continuing to evolve, and fingers crossed that they get through this quickly and efficiently and as easy as best as possible on that. Obviously the FCA around the discretionary commission, keep an eye on that as we get closer to whatever the process and plan is from the FCA. And don't forget, listen to the full interview there with Jeremy Yeh. Really brings the editorial to life and gives you a little bit sort of how Jeremy and the CAP HPI team are viewing the market and what to expect as we head into the fourth quarter of the year. But all in all, lots of headlines there, Curtis.
But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.